Good morning, everyone. It's a beautiful day in Craw Park. If we're just meeting for the first time, my name is Jonathan, and this series is all about day trading. Today was actually a bit of a rough day. I say that because I was actually down about $200 today. So in this recap coming up, you'll see that originally I thought the stock was going up, therefore I was taking long entries. However, the stock actually reversed, and so I actually flipped my position to going short, and I also doubled my share size. I doubled my share size because I wanted to get out of the hole that I had dug myself into. Also in this video, I'll get into some insight about Apple that I read today that actually affected the stock price dramatically. More about that in a second. Let's get into the recap. I got a real surprise for you today. I actually took one more trade, and I actually recorded it, so you get to see it live. Now, unfortunately, I didn't have my microphone on, so there's no sound. Here's a live trade. What you want to look at is the top left AMD window. It has a yellow ring around it, and the box just below that. First thing you're going to notice is I'm going to reduce my share size from 2,000 shares to 1,000 shares. I'm doing it because I'm trying to reduce risk. As you can see at the top left, I already have $291 of profit for today. I'm not trying to risk that, so I want to make sure I'm going to reduce my risk, therefore I reduce my share size. What I'm doing now is I'm looking at the chart to understand where is a good entry for this trade. You notice here I typed in 1739, I clicked the sell button, and now I'm actually in the trade. I clicked the sell button first because this is a short trade, meaning I want the stock to go down. At the top left where it says OP&L, that is the money that I am losing or winning in real time on this trade. So if you look at the yellow AMD window box, you'll see that the price on the left is the bid and the price on the right is the ask. The bid price is the price that I got in at $17.39. The ask price is how I'm going to get out of the trade. So at this point, it's really just a waiting game. Now, usually when I enter a trade, I expect the price to go immediately in my favor. In this case, I wanted to continue down below $17.39. As you see, that didn't happen. Right now, it's really fighting with that 1740 level. One thing to mention here is that whenever you enter a trade, you should always have a stop loss. A stop loss is really a price that no matter what happens, you're going to exit the trade. While I'm in a trade, I'm constantly checking the chart to see what is going on. At this time, I'm thinking, you know what? It's not going in my favor. I'm in the trade for a loss. Right now, $45, $50. Why did I do this? Following my rules, I would not be in this trade because it is definitely past the time that I usually trade. So as I see the stock moving up, I say, you know what? 1745 is my stop loss. I'm going to go ahead and get out. Now, I actually did not honor my stop loss. As you saw, it was at 1745 and 1746 for a second. But I am so very proud of this trade because I was watching the chart, not my P&L. I have a really bad habit of watching my P&L and not watching the chart. The chart will let you know when to get in and out of a trade, not your P&L. So because I held it, the stock retreated from that level and now it's back to a smaller loss. I'm still watching the chart and watching my broker. Now if you look at the top left to my open P&L, you see now I'm in the green. Now I'm green on the trade and I'm like, praise God. So now I'm trying to figure out, okay, where am I going to take my profit? So you will see I'm going to change my price to get out of the trade. 1736. Okay. Oh, 35. Even better. 34. Oh, I'll take that. You want to give me 33? Oh, you want to give me 33? Okay, thank you. You know what? I'm out. And there we have it. Trade is done. I am so grateful and relieved. Yes. Woo! Okay, so let's go ahead and get into today's trades. So as you can see here on my screen here on the left, under executed orders, I took a variety of trades today. I'm not going to get into each one specifically. However, I'm going to just highlight the most important ones from today. So starting with my failed trades, we see here that I tried to get in the market twice at 932.06 and 932.35. As you can see, both entries are red because I was too slow. Had I been more swift and got into the trade, I would have been up $100. As you can see, I tried to get in at 1853, tried to get in again at 1862, really 30 seconds later, still was too slow. When I did get in at 1867, think about that for a minute. I tried to get in at 1853. I finally got in at 1867. That is a gain of 14 cents. 14 cents times 1,000 shares, that's $140 in what, a minute? But of course, you know, it was a little too slow. As you can see, I finally did get in at 1867. However, the move had already happened. The stock was actually on its way back down. And so tried to scale out as quickly as possible. Even got a partial sell, which indicates that you know the stock is moving quickly. So I tried to get out here at 1857, 10 cent loss. And then also had to fill the next 100 shares at 1855. So really quickly, this is what this means. I tried to get out of a trade at 933.43. The stock was moving so quickly, I was only able to fill 90% of my order. As you can see, 900 shares out of 1,000. I had to cover the next 100 shares 2 cents lower. In the stock market, that's called slippage. When you try to get out of a trade at one price and the stock moves so quickly that you have to get out at a different price. As you can see, these first two trades I actually lost money. I tried to buy at 1867, sold 10 cents lower at 1857, lost $100. I tried to buy again at 1855, had to sell at 1847. As you can see, these two trades were at 933 and 935. Let's go ahead and see what was going on in the stock at that moment. So yes, looking at the chart, we can see that at the open, there was a nice, powerful swing up. As you see from my failed entries here, I missed the move. When I did get into the move, the stock was on its way back down. So as you can see at 933, the stock was already heading back down. So you'll see here that in my trades, these are long trades, right? I'm buying and then I'm selling. I want the stock to go up. The thing that I'm very proud about these trades is that once I read the chart and realized the stock was going back down, I flipped my entry from long to short. So as you can see, I'm buying and I'm selling and I'm buying and I'm selling. Because I'm going short, now I'm selling first and I'm buying back. So you'll see short sold and then I buy, right? And so I basically scalped this entire move all the way down. I really didn't want to close the day red, so I chose to trade with 2,000 shares, going back to my max size to get out of this hole. And so just going through the trades, you'll see that just basically scalping all the way down. Just quick in, quick out. And really, just want to make sure that I close the day green and walked away with some profit today. So as promised, I'm going to show you something that I noticed today in the market. I'm going to pull up the chart for Apple. Stock symbol AAPL. So this darker area here is the trading day. As you know, the market opens at 9:30. This lighter gray area is the pre-market. So I'm going to go back to yesterday. As you can see, the stock was actually at a high of 158.85. However, as you can see in the post-market trading, the stock significantly dropped from 158 all the way down to really about 144. Now, what would make a stock drop so significantly? Glad you asked. Let's find out. All we simply have to do is go to Google, type in Apple, click on news, and here we have it. Apple cuts revenue forecast because of slow iPhone sales in China. Now, whenever a stock significantly drops like that, most likely it has to do with revenue. So if you're a trader or an investor and you read this headline that Apple essentially is not going to meet their revenue target, what would you do? So think of the stock market as a large crowd of people. If something happened and one person got alarmed, started to panic, started to run away, what do you think everyone else is going to do? They're going to start running as well. So in the stock market, people start selling their shares very quickly. And that's how you get that dramatic shift from 158 all the way down to 144. So let's see what happened today to the price of Apple shares. As we can see, the news came out, dramatic shift in price from 158 all the way down to 144. Going into the pre-market, little fluctuation. But as you can see, when the stock opened, it really sold off. It has bounced back, but if I zoom out, you can see that it's nowhere near where it was. It may take a while before Apple can regain what they lost today, but with sluggish sales, plus the market is not really very strong, it could be even longer. All right, everyone, I'm gonna wrap it up there. So thank you all so much for watching. I hope you found this informative. So once again, please like, subscribe, and tell somebody about this channel. Thank you guys so much, and I'll see you next time.